Well guys, here today, Facebook stock is trading over $202 a share. It's approaching a new all-time high. It's not quite there yet, but it's getting pretty dang close, all right? Now, I put out a video on Financial Education 2 a couple days ago that you guys absolutely loved. It's called, Is It Too Late to Buy Tesla Stock? And I thought, let's go ahead and do the same type of video, but for Facebook stock now. And I think this is relevant whenever we're talking about one of these stocks that has gone up a lot, which in Facebook's case, it has absolutely gone up a lot. Okay, I mean, if you go back literally just a year ago at this time, the shares were trading in the $120 to $130 range. And since that time, it has been up and up and up. Okay, there's a few dips here and there, but needless to say, I mean, just look at the stock chart. I mean, it's gone from about $120, $130 a share to now it's trading over $200 a share. And so I thought, let's go ahead, let's talk about this in depth today. Is it too late to buy Facebook stock now? It has run a lot as we see so far this year, okay? Now keep in mind, Facebook was near the eye of the hurricane in a lot of 2017 and especially into 2018. And I would use that analogy all the time in my private stock group whenever we would talk about the lessons and I was continuing to buy into Facebook stock super heavy. I would always use the analogy that like Facebook was just caught in this massive amount of negativity. It seemed like everywhere you could turn in 2018, there was like negative articles. And then on top of that, the market got extremely rough in general October, November, December of last year. And when you add all that up, you get Facebook to go down to like $120, $130 a share, which I was super happy about because I bought into Facebook, obviously, you know, super heavy during those times. And keep in mind, Facebook stock was over $200 a share, well over $200 a share. If you go back to like July and August of 2018, so the stock has hardly moved in all that amount of time. And that's mainly just because they went through that entire hurricane, I like to call it, of just kind of the negativity and bad news, all right? Now, I was able to make a really big position in Facebook stock throughout 2018 and continue to buy on those dips, and I'm super thankful for that because we have a cost basis on Facebook of $153. We have a total gain on that stock of well over $18,000, okay? So needless to say, Facebook's treated us very well, and I have no plans to sell out of that position anytime soon, okay? So let's start talking about Facebook and if it's too late to buy Facebook stock. Now, first thing we got to understand is what Facebook does, what their business model is. Facebook owns a lot of huge platforms that a ton of human beings use, okay? So if you look at something like Facebook, this is a platform that has well over 1 billion users on it, actually technically over 2 billion users on it. They have WhatsApp that has over 1 billion users. They have Facebook Messenger, which has over 1 billion users. They have Instagram, which is the hottest social media out there that has over 1 billion users. They own Oculus, which makes VR gaming headsets, and that should be, you know, something that explodes over the next decade. When it comes to the virtual reality space and whatnot, Oculus is set to be one of the biggest players there. But needless to say, if you're really wondering what drives their business, the biggest drivers are Facebook and Instagram. That's where the majority of their revenues and profits come from. And those are the things that make this business so dang valuable. Although there's tons of untapped potential in terms of business they can make from things like WhatsApp and Facebook Messenger on a long-term basis. Now, I'm going to show you a chart here. This is daily active users, and this is just for the Facebook platform, okay? This doesn't take into account WhatsApp. This doesn't take into account Instagram. This is daily active users of just the Facebook platform. And you'd think with all the negativity that has surrounded Facebook, especially over the past year or two with elections, and then what are they doing with your data and privacy and all those sorts of things, you'd think they wouldn't be able to grow, and if anything, they'd shrink, but actually daily active users has continued to increase. And if we look at just this past quarter, over 1.6 billion daily active users, and keep in mind, this is just the Facebook platform, all right? If we look at monthly active users, MAUs, we're looking at over 2.4 billion now on the Facebook platform alone. So anybody that thinks like Facebook, it can't grow anymore or it's irrelevant or something like that, like the numbers just say differently. What we ended up seeing was Facebook in the early days was like the youngsters got on there, right? The teenagers and like the college kids and whatnot. That was who initially got Facebook started, and that's who initially got on and like made Facebook cool. And then some of those users moved off and some of those users ended up staying on. But what we ended up seeing is we ended up seeing the masses come onto Facebook, the people in their 30s, 40s, 50s, 60s, 70s, the grandmas are even on Facebook now, where it went from just being this cool thing for the younger folks that it was like, oh, what is this thing and can we even take it serious? All of a sudden it's like, it's a mass market product now, and it's continuing to still find growth, which is amazing when you look at like how big it already is, okay? And that's just Facebook platform, okay? Now, in terms of the company, if you go back to like Q3 2017, look at it versus Q3 2019, the latest quarter they reported, the business has grown revenues well over 70% during that time. And keep in mind, this is amazing because management's attention over the past 2 years, I'm talking about the executive team, has really been about putting out fires essentially with all the privacy and the data and the election stuff and everything and all the negativity around Facebook. Like their real focus has been, how do we clean up this business? How do we make it so this business can last a long time? Because the world is theirs as long as they could get through all this negativity that has gone on in 2017 and 2018 and a little bit into 2019. It hasn't all subsided, but that's where management's focus has still been. And you look at that chart of revenue growth, business still been able to grow 70% plus. That's absolutely amazing. And I could tell you, there's probably not another business on the planet that could go through that much negativity and grow their revenue 70+% in a 2-year span. I can't think of one of those companies outside of Facebook. I mean, it's absolutely amazing. Now, why is this revenue going up so fast? Well, if you know anything about business, you have to advertise on Facebook and Instagram, okay? If you're, a big business selling, products, whether you're already an established business or somebody up and coming, if you got goods and services to sell, Facebook and Instagram are usually going to be your best places. And if you look at something like CPMs are talked about to be on Facebook to have grown like 90% year on year. And needless to say, there's more and more advertisers coming on. Those advertisers are spending more money. Those ads are getting more expensive because you only have so much time you can scroll down your feed. And guess what? Advertisers want to get in front of your face, so they have to pay more and more and more as time goes on. This is a great thing for obviously Facebook's business model because the more advertisers have to pay, the more profits Facebook ends up making in the end on that whole situation, okay? So if we look at ARPU here, one of the most important metrics you can look at it with a company like Facebook that has an advertising business model, average revenue per user. What we're going to find here, only about $7.26 average revenue per user for Facebook, okay? But if you look at US and Canada, we're up to about $34 average revenue per user. Long term, I believe that number is going to $40 to $60. And I'm not even talking about super long term. I'm just talking about over the next, let's say, 2 to 5 years, that those numbers are going to go to $40 to $60 average revenue per user in the US and Canada. Europe, over the next 2 to 5 years, is going to get somewhere around where the US and Canada is at. So somewhere in, like, let's say the high 20s, low 30s. That's where I believe Europe will go over the next 2 to 5 years. Asia Pacific will get to a place where Europe is right now, which is around $10 average revenue per user. I believe that's where Asia Pacific will go over the next 2 to 5 years. And keep in mind, Asia Pacific right now is only a little over $3. And then the rest of the world will get to a place where Asia Pacific is currently, which is $3 plus average revenue per user. So obviously the revenues are going to continue to build here. The profits are going to continue to build. The net income is going to continue to build. And the business model is going to get stronger and stronger. And the profits are going to really start to explode over the next, let's say, 2 to 5 years for this business model. And it'll probably become, I wouldn't be surprised if in 5 years from now, Facebook is the most profitable company in the world, or number 2, okay? It's going to be between probably them and Apple. Google will probably be there as well. But in my opinion, the profit growth, the net income growth for Facebook over the next 5 years is going to be astronomical for that business model, okay? Operating margins right now, at least as far as their latest quarter, we're around 41%. I believe that's going to get to a place where it's back to 46% to 50% on a longer term basis. And that'll be something that increases their profitability dramatically, okay? Now, once again, you look at everything Facebook's had to go through basically over the past couple of years, and management's attention being on, how do we, put out all these fires? How do we keep this business safe? How do we make sure we don't tear down the great business we have built here? And you look at this business model, and it's been unbelievably profitable still. Look at the net income quarter after quarter after quarter. It's absolutely amazing when you talk about executive management hasn't even been focused on the profits and things like that. It's unbelievable. And you think about the amount of employees Facebook has hired over the last 2 years. We're talking about pretty much over a double up in the amount of employees, which that's a lot more salaries, that's a lot more compensation. But they had to do it to basically fix all their security and privacy issues that the company had and all the scrutiny that came down on them. They had to make that move, and they've done it. By the way, if you're wondering what happened in Q1 of 2019 and Q2 of 2019, they had to pay, over $5 billion throughout those quarters in fines from the government as well as legal expenses. So that's what killed net income in Q1 and Q2 of 2019. But it's been amazing what the business has been able to do and what it's been able to generate for net income on with everything that's gone on. And you look at something like capital investments, this is starting to slow now. So the company went through a crazy spending spree basically for the last 2 years, and it's starting to slow now. So if you look at Q3 of 2018, they spent $3.3 billion on capital investments. Q3 2019, $3.6 billion on capital investments. You look at an annual, right? $6.7 billion they spent on capital investments in 2017. 2018, they spent nearly $14 billion, which is well over a double up in capital investments. But the business has been, we just got to grow our expenses, unfortunately, to make sure the business was safe. And that's what management has had to do. And I think that was the right decision, because at the end of the day, the world is Facebook's. As long as they were able to put all these things at bay and all this scrutiny coming down there, as long as they were able to fix those fundamental problems, whether we're talking security, privacy, elections, all those sorts of things, as long as they were able to fix that, it's unbelievable. So I applaud the management team at being able to handle that and getting the business to a place where it's much safer and much better from a privacy perspective in elections and all those sorts of things than it was, just a few years ago, okay? Unbelievable balance sheet on this company. We're looking at a company with over $52 billion in cash and investments. And keep in mind, the net income number in this Christmas quarter should be absolutely insane. Cash and cash equivalents, along with marketable securities, should get well over $60 billion after this quarter. So, needless to say, I love a great balance sheet, and Facebook absolutely has an amazing balance sheet. And, with that type of money, it gets you through rainy days. It lets you invest in the business heavily. And if anything happens, whether we're talking valuations were to come down huge because of a recession, or just something happened where VC funding dried up and maybe a lot of businesses got, dramatically cheaper, guess who's going to be in a great position to gobble up a ton of those businesses? A company like Facebook with, going to be approaching $60 billion plus of cash and investments on their balance sheet. Absolutely love that, okay? Now, if we look at some numbers here around Facebook, we see the company is expected to do next year around $9.15 of EPS, which would be up dramatically versus this year, which analysts are expecting about $6.45 this year. That could push up to over $7, depending on what they report for this current quarter we are in right now. We'll have to see how that shakes out. But needless to say, analysts are expecting $9+ per share of EPS. I think they're going to probably do $10+ in 2020. I don't think analysts have modeled quite how dramatically a change where basically you're not going to be spending nearly as much on capital investments in adding employees and all those costs that could bring down net income, at least in the short term. I don't think they've modeled it correctly. I think the company has a great probability of earning $10 or more than $10 next year in 2020. But needless to say, even if they do $9.15, that's a dramatic uptake year over year. Now also, if you add on top of that, the business is expected to grow revenues by close to 22%. That's what analysts are expecting next year. Don't be surprised if those numbers are wrong as far as they actually grow a little faster than that. Facebook historically has been a company that has been able to beat what analysts are expecting. So if analysts are expecting, let's say, 25% growth for a quarter, Facebook's historically been a company that would beat that and do 26%, 27%, 28%. We'll have to see how that shakes out. But at the end of the day, even if they grow 21.7%, which the average analyst, projects the company, that is phenomenal growth. And you're not going to find many companies out there that have the type of scale Facebook does. Well, pretty much nobody has the type of scale in terms of users. But I'm just talking about big tech companies. You're not going to find a lot of them that are growing at a 22% revenue clip. That's just not. And I expect Facebook over the next 5 years to be able to grow at least 15% plus when it comes to revenues per year easily, each and every year for the next 5 years. So needless to say, this is a business that has a lot of growth ahead of it over future years, because those advertising rates are just going to continue to go up. Where are you going to advertise? Like, if you're a business, where are you going to advertise? You have to be on Facebook and Instagram if you're a company. If you're spending money anywhere else over Facebook and Instagram, it's like, what are you doing with your money? You just have money to waste, because you're going to get way more bang for your buck by doing it on Facebook and in the Instagram platform at the end of the day, okay? So that's why their business will continue to increase pretty dramatically each and every year for years to come in the future, all right? Now, here's where this gets real interesting. Here's why I say the stock is actually, you're not too late to buy the stock, and actually should be buying more shares of the stock here, okay? It's at a forward P of 22, a forward P of 22 on this company. Keep in mind real quick here, the market in general right now is trading at a forward P somewhere around, probably around getting close to 19 or so, okay? So Facebook's slightly above that, but keep in mind Facebook's growth is parabolic compared to the average company that's trading in the S&P 500 or something like that. Most of those companies are, you know, kind of like break even on their business, or maybe slight growth, like a 3 to 5% growth. Facebook's over here going to grow 20% plus and 15% plus for years to come in the future. And to be trading only a little above what the market's trading at, it's rather a joke. But not only that, this is the best deal in big tech by far and away. When you're talking about these companies, these huge tech companies that have hundreds of billions of dollars of market cap, they're by far and away the best deal. Because you look at another company, okay, look at something like Google McDougal. I definitely like Google. I love Google stock. I think it's a great stock, but it trades at a forward P of about 25. Keep in mind, Facebook was at 22. And I can almost guarantee you, if we're going to look at who grows their net income more over the next 5 years, Google or Facebook, I'm going to say without question Facebook. Facebook at the end of the day is just a younger Google essentially, where they just found a better way to get data, and they found a better way to even do advertising than a company like Google. Google's amazing, but there's no way Google's going to basically grow net income faster than Facebook over the next 5 years, but it's trading at a higher valuation, and Google has a lot of the same regulatory risk around it that a company like Facebook, so it's not like a risk reward standpoint, it's less risky or something like that. They both have risks definitely associated with them, and there's just no way Google will outgrow Facebook in my opinion when it comes to net income over the next 5 years. So Facebook should be trading at a premium to Google, and quite a bit of a premium. However, we have an opposite situation where Google is trading at a premium to Facebook. It literally just doesn't make sense, okay? You look at a stock like Apple. I love Apple. I bought Apple on that huge dip earlier this year. I covered it on the channel when it was like $145 a share. We made a lot of money on it. I took those profits and I believe I invested those in a Tesla stock, which has done even better for us. And so needless to say, I love Apple. I believe a lot in, 5G. I'm investing in some companies that do business with Apple. They're Apple suppliers. But Apple's trading at a forward P approaching 19, which is fine and dandy for Apple. That's around where the market's trading at right now on a forward P basis. But once again, if we're comparing Facebook and Apple, it's not even going to be remotely similar net income growth over the next 5 years. Facebook will massively grow faster net incomes over the next 5 years. If you're going to look at it 5 years from now, what is Facebook's net income as a percent growth over the next 5 years? What is Apple's? It's not even going to be close. Facebook will well outgrow them. And you're looking at it, and Facebook's trading at a premium to them. And it's not a big premium. It's 3 points on a forward P basis, when really this company should be trading at, probably 7 to 10 points higher than Apple. So if you look at this, nothing wrong with Apple trading at an 18 or 19 forward P basis, but if Apple's going to trade at 18 and 19 forward P basis, then Facebook needs to be trading at a 28 to 29 in my opinion, okay? Microsoft, another huge tech company, we look at something like that. That one's trading at a forward P of well over 25. Another company that there's no way Microsoft outgrows Facebook over the next 5 years net income. I'll just be willing to take that bet with anybody. And here we have a situation where Microsoft is trading at a big premium to someone like Facebook, and it just doesn't make sense because Facebook will well outgrow any of these big tech companies. Then you look at something like Amazon, okay? Amazon's trading at a forward P of 60 to 70 right now. And meanwhile, I'm not even convinced that Amazon will grow their net income faster than Facebook over the next 5 years. But yet you have Amazon, which definitely will have a lot of risk around it, trading at a forward P of 60 to 70 versus Facebook 22. It just doesn't make sense. So in my opinion, Facebook is still, even though it has gone up a lot this year, it is still a stock that I'm very interested in buying and adding more shares of. And I now consider Facebook, well, I've considered it pretty much most of 2019. I consider it the easiest money in the stock market, which I used to call Apple stock the easiest money in the stock market. I did that video, I don't know, maybe a year and a half ago, why Apple is easy money, and I should do a video why Facebook stock is easy money, because it is. And let me just laugh out loud at that people. I mean, it's unfortunate a lot of people deleted their comments on why they thought I was crazy and why Apple wasn't easy money. And that's when Apple was $100-something a share, and they're like, oh no, you're not talking about anything. Apple's doomed and this and that. And obviously Apple today trades, I'm not sure if it's doubled up since that video came out about a year and a half ago, but it is up massively. But now I look, and if we're looking out to the future, where's the easiest money in the stock market from a risk reward standpoint? In my personal opinion, it is Facebook stock, guys. So hope you enjoyed this video. As always, let me know your opinion down down there in that comment section. Make sure you smash the thumbs up button if you enjoyed today's video. And if you didn't agree with today's video, don't worry. In another year and a half, I'll circle you. And we'll be making a video about you when I make a video about the next stock that is the easiest money in the stock market, all right? Anyway, I hope you guys enjoyed. Thank you for watching. Have a great day.